This is a review of our trades for Friday, September the 20th, 2013. After making a large advance to the upside earlier in the week on Wednesday following the Fed's decision, we started to see this market top out and confirm our area of 1727. Thursday, we had an entry here following a retracement to the upside. And we talked about this in Thursday's trading plan, where if we see this area hold under 1727, then we want to be net sellers of this market, buying puts, in which we did here, the 1700 puts. These are weekly options that are going to expire this coming Friday, which is a week away. We started buying them between 3 and 350, and we have established positions from this area at 1722. On Friday, following the overnight action, we started to make a little bit of a failed advance to the upside here in and around this area that we discussed in our trading plan, in which we got short again this market, buying more puts between 350 and 4. The market made a nice move to the downside here throughout the course of the day, and we were able to close the position out between 8 and 850. So where we were buying them between 3 and 4, we closed them out between 8 and 850. The advantage of buying the options versus the futures, or selling the futures in this case, is that you can be in the market for more than one day to be able to participate in these large swing moves from resistance down to support. So they started here on Thursday, rode this throughout the afternoon and the next morning, and then continued on the next day. The other thing with the options that we select are out-of-the-money options with a fairly low delta when we begin. So we're less aggressive in the trade when we're starting the trade, when we need to be. We need to be as little as risk as possible, and then we begin to get more aggressive with the position as the market moves in the favor of the trade. Because as this market moves down, delta increases, in which we have a stronger presence in the market as it moves in our favor. So really, for the type of trades that we do, very short-term oriented, very well defined between resistance and support, these weekly options are a great instrument for us to trade. Least amount of risk when we start, and then we get more aggressive in the position as the market moves in our favor. Buying these options between 3 and 4 represents a total of $150 to $200 risk to the account. That's the worst thing that can happen. The other important consideration in using these options to manage this trade is that in here, when we initiated this option position, this market could very well trade anywhere in here up to the 1727 area. So our position for the trade is such that as long as the market trades under this 1727, I want to be net short. But this can happen, as is this can happen in here. This market could trade up into here, and again here, and it often does. This would not change my expectation. I would still want to be short in here, and I would still want to be looking for this target back down in here. Now, with the option and having this maximum out of pocket in place, I can handle this much better than I can with a future. As a part of our service at esoptions.com, each morning we send out a daily morning trading plan which highlights those support and resistance areas that are very much a part of our trading plan. We show these levels above and below where the market is currently trading, plus or minus 50 points. So we always have a framework, and so we always have the levels identified in place so that when the market moves, we know exactly where we are in relationship with those levels. These levels are the framework from which we trade. During the course of the day, we send out real-time trade alerts when we take an action or when we're about to take an action, and we send these alerts out by Twitter. And then we also have a live broadcast room where we show our charts, we show our notes, so that you can always come in, have a look, and see exactly what we're looking at and how we're executing our trades. At first glance, the levels are hard to believe, and the only real way is to see them for yourself. So we invite you to come into the room at esoptions.com and try us for 3 days. For those 3 days, you'll get an early morning daily update as to what we're planning that day. You get access to the live broadcast room, and you'll see the alerts in real time if you have a Twitter account. But most importantly, with that daily morning trading plan, we identify the levels and then watch throughout the course of the day on your machine with your quotes and see how this market behaves at those areas that we describe and talk about. After a couple of days of watching it, I think you'll understand why they're so important in our trading decisions. If you have any questions about what you've seen in this demonstration, feel free to contact us. I prefer by email, but if you would like, give us a call. If I can't talk to you, I'll call you back. Thanks for watching.